I was just gonna say, there's a lot of things that people are getting wrong when it comes, and one of them is just focusing on the rate headlines versus solving for your monthly payment. So rate is important, like we talked about, but what can you personally afford, which is super important.
And that's important too. And I also think people get caught up in the rates too, because depending on how big your loan is, a 1% difference in a rate is not that much money. I mean, depending on your loan, it could be a couple $100, right? And, you know, is it worth waiting, 6 months to get a 1% or a year to get a 1% difference in a rate that would have saved you a couple $100 a month when you can totally just refinance? People kind of have this illusion that, oh, if rates go from 6 to 5, I'm going to save like 25% of my payment, and that's just not how it works. So you really have to understand the numbers. And I always, when I work with my clients, like I sit down and I go through with them the difference in the different rates because it's not as significant as you might think.
Yeah. And when you're working with a good lender or a good realtor, they're going to be able to sit you down and say, okay, if you buy this house now and rates do drop in a year from now, let's say they drop 1%, like you said, they're going to be able to do a projection on, okay, here's your cost to refinance. If you stay in the house for 18 more months or 24 more months, that's how long it's going to take you to recoup those sunken costs of refinancing. So if you know that's your forever house, go for it, go refinance. But otherwise, maybe the math doesn't math, but working with a good lender and a good realtor will tell you that.
Yeah, it'll really help you out.